Hello, everyone. It's 1 o'clock, so we're going to get started. Thank you for joining us. My name is Ava Agudelo-Winter. I'm the National Technical Assistance Coordinator for the New Entry Sustainable Farming Project. Welcome to the National Incubator Farm Training Initiative webinar on teaching financial literacy to beginning farmers. This is our 10th Nifty webinar and is brought to you by the New Entry Sustainable Farming Project, which is based in Massachusetts. We've been operating our land-based beginning farmer training program now since 1998. And we're very excited to be able to bring this information to you today. Teaching financial literacy to beginning farmers is extremely important to the work that we do. As anyone who's invested in the success of beginning farmers knows, understanding how to work the numbers is really key to running a functioning small farm business. And at the same time, not all of us who are providing services, training, and support are experts in financial literacy ourselves or have a background in teaching what can be really dense and dry topics to farmers. So Nifty's taking on this financial literacy for farmers as a main focus of our professional development work, and we hope that we can help improve everyone's capacity around this essential topic area. As always, we would like to thank our sponsors, the Cedar Tree Foundation and Northeast SARE, for making this event and the Nifty program possible, as well as our presenters, Julia Shanks from Julia Shanks Food Consulting and Gary Matteson from the Farm Credit Council. Okay, agenda for the next hour and a half. We'll start with a quick technology training to go over the software, and then I'll talk for a couple minutes about the National Incubator Farm Training Initiative, and then we'll move into our presentations. First, we'll have a presentation from Julia Shanks on her approach to teaching financial literacy to farmers. Following that, Gary Matteson will take us through some excellent tools from Farm Credit. After that, we'll have about 20 minutes for questions from you, so you'll be able to ask about issues specifically related to your individual projects. The presentation slides, some of the spreadsheet tools being presented, and a recording of the webinar will be available on the Nifty website within 48 hours, so you don't have to worry about writing everything down or reading all the slides as we go, and you'll get the link for that recording in a follow-up email after the webinar. And on to the technology. We've got Cisco WebEx service bringing you this webinar. This is different from previous webinars you may have attended, and it's new for us too. So this is only our second webinar using this platform, and in case you're not familiar with the controls, there's a quick orientation, and do try to be patient with us as we get familiar with this new technology as well. Attendees are muted upon entry to help everyone hear the presenter. The control panel displays which presenter is speaking. You will also have the option to raise your hand to get the organizer or presenter's attention, and you can also use the chat window to ask questions throughout the presentation. You can direct your questions to everyone or to specific attendees or just the presenter. We'll be addressing questions at the very end, but not during the presentation. You can also direct your questions specifically to Noelle. You'll see her name on the list of presenters, on the list of attendees. She's a new entry staff person who's helping us out with this webinar, so she'll be checking in the box and compiling everyone's questions. When you submit a question, please be as specific as possible, and please indicate which speaker you're addressing, so who you would like to answer the question. You may also have noticed you got an email reminder just a few hours ago that there's a call-in option. So if you're having sound issues because of your internet connection, please check that and try signing out and back in again. You can also try calling in the number provided in that invitation email. We only have 100 call-in lines, though, so that's a limited option. We do have 150 people registered for this. If you're calling in, please mute yourself to avoid having any background noise. My intention is to mute everybody upon entry, but I can't always do that for mysterious reasons. So if you could also just be aware that there might be background noise coming from you, if you could please mute your phone using the buttons. And we're actually getting some background noise right now, so I'm just going to request that everybody check and see, make sure that they're muted. Somebody's being somewhere, so it'd be good if we could mute yourself. That'd be great. With you as we are now, your control panel is automatically minimized. You can hover over the green bar at the top center of your screen to get a small control panel, and then either click return to get back to your big control panels, or click the down arrow and scroll to view to change how the presentation appears on your screen. You view the chat window or participants using these smaller control panels. After the webinar, you will receive an email with links to a follow-up evaluation, the recorded webinar, and some of Nifty's other resources. Please fill out the evaluation. It doesn't pop up automatically using this software, which is sad, but we would really love to hear your feedback. Being able to track whether or not we're doing a good job makes it really easy for us to serve you better in the future. So that's up the housekeeping. Now I'm going to talk for a minute or two about Nifty. I know a lot of you are familiar with this information already, so I will try to keep it very brief. In 2011, New Entry received funding to provide training and technical assistance to startup incubator projects across the country. You can see our map here of incubator projects that have sprung up in the recent past. There are now about 150 projects, either in the beginning stages or fully operational on this map, which you can find on our website, along with other demographic information about those projects. Many of them have shared challenges, and New Entry and various other partners have come together to address the increasing requests for training and technical assistance on these shared topics of interest. As you know, we offer webinars like the one you're currently viewing. This is our 10th webinar, and all of our previous webinars are available to view for free on our website and have now been viewed well over 1,000 times on YouTube, which is really exciting. We also offer a referral service for you to receive free one-on-one mentoring and technical assistance from our project partners here. So ALBA, New Entry, the Intervale Center, the Minnesota Food Association, and Cultivating Community, the New American Sustainable Agriculture Project. So you can contact Nifty directly to receive one-on-one technical assistance. As of now, Nifty has provided well over 175 hours of technical assistance to about 58 organizations throughout the U.S. and Canada. We've had 3 national in-person field schools that have brought together dozens of organizations to share and learn from each other. Our 3rd field school just happened in October. We had over 70 attendees at Headwaters Incubator Project just outside of Portland, Oregon. It was a really great event. As for online resources, we have an excellent and relatively low volume but high quality listserv, which anyone can sign up for on our website, and a variety of training materials. So our online searchable database of over 150 documents, sample curricula, manuals, forms, case studies available for free download. And also toolkits. So we have a comprehensive farm incubator toolkit that came out in September of 2013. We have case studies and a guide to metrics and evaluation for farm incubators. There's a lot of great information in these, and you can download them again for free on our website. And I definitely encourage you to take a look at all of these if you haven't already. You can go to nisfp.org/Nifty to follow those resources. So that's enough of that. And now I'm going to turn things over to Julia, our first presenter, who is Julia Shanks Consulting, and I want to remind everyone that you can enter questions again into the chat box as Julia presents, and we'll keep track of these and have her address them at the end of the presentation. So, Julia, are you all set? Oh, Julia. So, there we go.
Can everybody see my screen now?
Your screen.
Okay, great. Thank you. Well, hello, everybody. My name is Julia Shanks, and I am a chef and entrepreneur. I had my own business for about 6 years, and I got an MBA about 8 years ago and taught accounting for years. After that, I started providing TA for dozens of farmers over the last 6 years. So what I'm going to share with you today is pretty much a culmination of what I've learned in working with all these fabulous farmers, and also some of the more challenging situations had. And as you probably know, that's where we learn the most, is from the challenges. So the underlying goals of TA, the first one is really to help the farmers understand why bother. I know they get into farming because they want to be working the soil, being outside, growing produce, working the land, and building a sustainable food system. It's really hard to really understand why they should even bother with financials. But I really want to give the farmers knowledge and tools so that when gone, they can figure what they're doing on their own, that they have a resource that they can take with them. And of course, we want them to get the loans that they need and avoid a cash crisis that is inherent when you're not paying attention to the financials. Ultimately, we just want to ensure the farmers are financially sustainable. They bother. This is the toughest thing to get resident farmers to understand. But the first thing is, if you budget, you can buy. If you're planning ahead, you know when you'll have cash flow available and make purchases. All of these seasonal businesses, the farmers are planting their crops in March and they're not seeing their dollar until June or July. So having a financial plan can really help them plan for the seasonality of their business. Way to apply for loans to get the bigger purchases, we have the tools to put together a protection to help them apply for the loans and get the money they need. And, of course, they need to file their taxes. So in terms of teaching financial literacy, it's a building block. It's a process of getting them from one step to the next. The first step is really just getting them to understand the basics of accounting and the basic principles, such as cash versus accrual, the income statement, balance sheet, and we're going to talk a little bit about that later on. One of the basic understanding of accounting, you can get them set up with systems for bookkeeping, whether that's getting them set up in QuickBooks or having an Excel spreadsheet for them, but having a system so that they can track what they're doing. And start tracking, they measure their progress. Are they meeting their benchmarks? If that's a labor goal that they want labor to be no more than 33% of revenue, once started tracking, they can measure these things and see how they're doing. And when they have the benchmarks and know how their business is going, they can start to plan for growth and increase profits. I put together these 7 tips for financial literacy before we get into the basics, nuts and bolts. The first one is to speak English or Spanish and not Cantonese. There's so many terms in lingo and profit margin and gross margin and capital expenses and depreciation, and they don't make sense all the time. And often people use them in the wrong context and not in the perfect accounting way. So it can just be easier to speak, basic English. How much money did you make in sales instead of asking for revenue? What were your expenses? What did you have left over in your expense after you paid off all your expenses from your revenue? So just asking the basic questions, not necessarily asking for net profit or gross profit or revenue, is a little bit easier. And along those lines, perfect is the enemy of the good. So much what I do has been tailored for farmers to what makes sense for them. And it doesn't necessarily align with traditional standard accounting practices. And if you were to take this that I'll show you later to an accountant, they'd probably be horrified. But it works, and it's the tool that will work for the farmers. And going back to the point of acknowledging resistance and understand why if they're not receptive to the training that we're offering, then it's going to be harder for them to implement any sort of tools that we give them. Is the answer. In talking to farmers, oftentimes they really know what their problem is or where they're having challenges, but in listening to them talk, can hear them and help them figure it out. As an example, I was talking with a farmer the other day. They were saying that their sales at a farmer's market was really low because they couldn't sell certain products, and farmers were selling tomatoes, therefore they weren't allowed to sell tomatoes. Listening to the problem of how to increase sales at the farmer's market, you can hear that their challenges are about being in farmer's markets where they can sell products or tailoring the products that they do have so that they can sell at the farmer's market. If you don't have a vision, if you don't have a goal of where you want to go, then it's hard to make a plan to get there. It's along the lines of that old adage, if you don't know where you're going, any road will take you. So it's important to help the farmers define their goal and define their visions, whether it's an amount of revenue, whether it's being able to take time off in the winter. What does their future look like, and how do they want their business to be? Find specifics around it. Define what success looks like. success may look like $100,000 in revenue. It may look like being able to pay yourself $40,000. It may be not having any debt on the farm. So it's important to define success so you know how you want to achieve it. Finally, build your team. And, not just the team of farmers, but your team as a consultant. They may need help with marketing, and if you're not an expert in marketing, I know I'm not, and it's really great to have people that can help you give the farmers the further tools that they need. To the basics of understanding accounting. What I'm going to do is I'm going to go over the basics of the financial statements and tell you about the underlying principles that I see in the statements, because it helps to clarify why we do things, how we do it. It makes it easier to create these statements when you understand the underlying mechanisms. The first one is the income statement, and this one summarizes the operating revenues and expenses. And I want to highlight the word operating, because we're talking about what does the farm earn in terms of revenue from net sales. That's their primary operation. Now, they may have revenue because they're renting out the barn to somebody else. They may have cash coming in from a grant that technically they need to count as revenue for tax purposes, but it's not the basics of the business. And if you really want to understand the basics of the business, you need to be able to separate the operating revenues and expenses. Goods in the income statement, seeds, seedlings, if bring in produce from other farms to resell, the direct operating expenses, which may be bill amendments, then to harvest. What I call occupancy is rent and utilities, general and administrative, whether it's web hosting for your website or repair and maintenance, and of course the income taxes. The operating revenue or the operating income is revenue minus expenses. Then what to do is keep below the line other income and expenses. And tax purposes, it's certainly important to recognize the other income and expenses, but it's tangential to the basic operations. So it's important to separate out. If the farmer has their grants glommed in with their revenue, it's really hard to see if they're sustainable without the grants. So the cash flow statement is broken out into three parts. It's cash flow from operations, investing, and financing. And it's important to recognize that the net income is not cash flow. Going back to what I was talking about in the earlier slide, just because you have money coming in, you might have money coming in from a loan that you get, or maybe you money going out because you made a capital purchase, can confuse what's cash from operations as cash flow in general for the business. Balance sheet is assets, liabilities, and owner's equity. It's a nuanced report, and it's beginning farmer and the beginning accounting business person. It's a bit more nuanced, and there's certainly a lot of information that can be obtained from the balance sheet. But for the purposes of getting people into financial literacy on the onset, I don't want to too much detail of the balance sheet, but that the assets equals liabilities plus owner's equity. The assets are what you have: cash, inventory, your equipment, your buildings, breeding stock, how you got it, or who has claim to it. Did you get loans to buy assets? Did you have accounts payable? Do you still owe your vendors for seeds or amendments or tools? Or did you get assets through earned income, through the money that you generated through the farming operations? Or it could just be from your own investment. You saved up money before you decided to become a farmer, and you have that and you want to invest that. The way to think about it is the owner's equity is your assets minus liabilities. Balance sheet equation turned on its side is just the balance sheet. So, create financial projections. I have to create the balance sheet for the investor or the banks when you want a loan. You want a cash flow statement and an income statement as well. And the cash flow statement is really important because you want to make sure that you have enough money coming in to support your operations. While you can have a negative cash flow, meaning in any given period you have more cash going out than you have coming in, it's important you're never in a negative cash situation, and that's when you get into trouble. I want to share with you, let's see if I can share. Share with you what I'm calling a quick and dirty cash flow statement. And it's kind of a glom together income statement and cash flow. Part is cash flow, top part is the income statement. And what I've done is I've listed out as many categories as I think is possible because I really want the farmers to think through every component of their business. So what you can do is fill out what you think you want to earn in any given month or in any given year. So maybe it's $8,000 from your CSA subscriptions. Maybe you're going to do $115,000 in wholesale. And once you have your annual projections, you can then break it out by month. And this is where it's really going to help you with the cash flow planning. Suggested earlier, March, April, and May is when you have a lot of cash expenditures, but not necessarily as much revenue. So it's important to really map it out month by month so that you can make sure you never go into a negative cash situation. Cost of goods sold, maybe you buy the produce for resale. Gross profit is the revenue minus cost of goods sold. And then in terms of expenses, you see that first I have a lot. I'm just going to scroll down really quickly so you can see the extensive list. So you see that I have a lot of different categories. And the reason why I do this is that I think it's important to really understand every little point of your business. Sometimes people forget things. It's like, oh, well, I only need to spend $50 on row covering, so it's not a big deal. Or, my computers are only $20, or I only have, the due subscriptions, maybe to NOFA or whatever. It's like, oh, that's only $80. All these little things add up. So it's important to detail everything because, it's here $20 there and a few more times, and you've got some real money. That's what can get a farmer in trouble. So a lot of different categories. I like to categorize them into basic groups. People prefer variable costs versus fixed costs. I like to think about them just in the different categories of direct operating expenses, what expenses are associated with actually running the business. Then payroll, have salary expenses, salary expense, or hourly. You might need to pay some sort of benefits or health insurance, workman's comp. Don't forget payroll. That's a big one, and or payroll tax rather, and service to do your payroll for you. The general and administrative expenses. Hire a bookkeeper. Obviously, your insurance. If you need to maintain your vehicles. In promotion, if you need to do any marketing, repairs and maintenance, oxy, and then get down to our net operating income. So you see in this example the numbers are negative early on, but that means that they need to start with a cash in the beginning of the season to get them through to whatever that month is. Let's see, August, when the finally starts to exceed, when the revenue exceeds expenses. So I'm getting down below the line, below net operating income, and this is where it's getting glommed together with the cash flow statement. So I have here the other expenses and other income, whether it's getting a loan to come in, an operating loan or an overdraft line, and for expenses. So it might be income tax or capital purchases. So list those separately. So it's one spreadsheet where they can really understand the cash flow. So start to see the net cash flow. So while the outcome might be negative in the first couple of months, they can have a positive cash flow because they have cash coming in. And then at the bottom, you can keep running tally of the beginning cash. You subtract your net cash flow. You have your ending cash. And you look through that entire row to make sure that you're staying cash positive the entire time. And if not, then you need to reconsider. The first thing you can reconsider is when you're making your capital purchases, and that makes sense. You can also consider having a loan to help you get through the slow season. Of course, you can explore your expenses and see what sort of expenses you can delay or put on, or just eliminate altogether. And obviously, at the very top, you can figure out how to increase your revenue and understand where your shortfalls are going to be so that you can work on increasing revenues during those months. So that is all of my presentation, but I certainly invite you to touch. I have a lot more tools. Are you in my PowerPoint again?
I know we stopped seeing your PowerPoint now.
Oh, okay. So let's see if I can try it again.
Yep.
Okay, so I just wanted to let you know that I have a lot more tools on my website for cash flow, setting up charts of account for QuickBooks. So I invite you to visit my website and certainly email or call with questions. And I thank you.
Much, Julia. That was really great. And yeah, I encourage folks to get in touch with her if you do have questions. And also to include your questions in the chat box. I'm not seeing a ton just yet, so if you feel like things are not making sense, by all means, we've got these experts on the line for quite a while and got advantage of them. So now I'm going to hand things over to Gary. Get to enter questions into the chat window. Gary, how are you doing? I hear you now.
Are you able to see my my screen?
Nope.
Okay.
To the Quick Start menu and hit Share. There we go. Great.
Okay. Thank you. I know that I looked through the list of who else is on this call, and I noticed many names of people who saw this presentation not too long ago in New York State with the Cornell Group. And actually, Benneth is on there and presented with me on it. So for those of you who are seeing this again, please consider it reinforcement rather than repetition. I work for the Trade Association of the Farm Credit System here in D.C. And the job is about sharing best practices for training young, beginning, and small farmers with the farm credit associations around the country. I'll say this again later on in the presentation, that one of the purposes of this presentation or of this is to make this presentation available to you, presented by your local farm credit folks. If that works for you, in operation of your being farmer training program, you need to bear in, or I shouldn't say get in, some outside financial expertise. I'd like to talk to you about collaborating with your local farm credit association to get a loan officer or one of their staff in to actually go through a presentation so to be able to offload some of that financial skills training from desk and put it on somebody else's list. So just that as we go through this, just to put presentation in the context from what Julia was just showing you, I'm concentrating on heading towards the same thing that she showed you last, which is a spreadsheet that is cash flow. What I've got is essentially be showing you what I show to your students, your clients, in order for you to do this kind of training. I do have a web address later on in the presentation from which you can download all of this material that is including the slides and all the handouts that I'll be mentioning. So I'll be going through this pretty fast because you just got a good dose of this, Julia, and I'm assuming that you are familiar with most of the concepts here. I'd like you to concentrate on, is this way of presenting it value? Is this something that you can use in trainings with your own students? And help to define success. There are many different forms, certainly, but the idea of financial sustainability is certainly very important. This is not intended to be a lesson in how to borrow money from Farm Credit or anybody else, but to help participants, your students, realize that you talk about, well, if you go borrow money or with a lender or with FSA or with a commercial bank, and it should be seen as a neutral arbiter of financial information and their capability to tell their stories accurately. To establish that role of why you'd be preparing all this financial stuff doesn't mean you have to go borrow money, but one of the ways, the reasons to prepare financial statements and prepare a good financial plan is to be able to talk the same language that a might want to. And of course, you know this. I draw attention to that first bullet of planning to be happy, because I think that's a very important thing to recognize and inspire in beginning farmers, is to help them identify what it is about this farm thing that they want to do they really enjoy. Because they understand why they really want to do this, may lack the commitment and motivation to continue. As a vision for their farm business, as you help them create that, that you concentrate on inserting pieces of reality into that the farm that they see, the farms that their friends and neighbors have, are not necessarily achievable in the short term. It takes likely a longer time and judging of plans as time goes along. So the ability to plan and then replan is a very solid element of operating a business, because as conditions change, they have to respond to those conditions. So the next slides are just quickly through this one-page business plan tool that I think the important part of this slide is the mnemonic there in the right in the middle of the slide, the SMART goals. That goals need to be specific, measurable, attainable, rewarding, and timed. This is not a form to fill out to submit for a loan. This is a way to help beginning farmers think about what they're going to do. So in the example I'll show you in a minute, the objectives in each of these columns follows through onto the next slide that I'll show you, that the first column is a people objective, a financial, second column is a financial objective, and so on. These are 4 or 5 areas identified by Risk Management Agency as what a business plan should address. That's why these 4 topic areas are up here. Of course, you could fill out several business plans on any one of these topics, but this example is to go a game. Topical, the first column is personnel, the second is financial, the third and fourth and marketing. So in the first column, there's the happiness, your business plan, to train your hired person, Charlie in this case, for tasks, so to be able to take a day off allows you to do that. I was a farmer myself 30 years. I fully understand that if you don't plan to take a day off, you will never take a day off. And that includes those lessons. I know we're really good at insisting that farmers work hard and are trustworthy and loyal and helpful and friendly and courteous, kind, and all of that kind of stuff. But encouraging beginning farmers to also recognize that they're not only one in this farm business, that even if their spouse, significant other has an off-farm income, that they're just as much engaged in the business and they have their wants and needs and needs to be considered in planning for time off. Up to the mission statement up there, it doesn't have to be complicated. Students to copy this or your favorite mission statement is the idea, as long as they're regularly asked to read to that or modify it as they go along. Okay, where we're here, we've got a one-page business plan. Let's talk about dollars. Here's just a blank. I'm going to skip right to the filled-in version here. These numbers on here directly relate to a spreadsheet that I'm going to be showing you in another few slides. They're odd numbers. So these numbers are actually benchmark information from essays in the Northeast. And right away I can hear some of you saying, well, that's not the pricing I have in my area, or that won't work where I am. I would point your attention to, in the left-hand box it says historical, that this is also expressed as a percent of sales. And that is what you can take to any part of the country, and this for a real sales-based vegetable business, in this case, you saw in the last business plan there, one-page business plan, Tyler's Tip Top Tomatoes. This is for businesses that would be selling retail, farmers markets, possibly farm stand, and CSA, all in combination. That numbers I would stand behind as a percent of sales sort of benchmark from operations that in the sample size ranged from $40,000 to about $400,000. So these are really repeatable numbers. The reason why net profit is outrageously high is that this is a very low overhead operation. This would be considered in this model that I'm presenting to you. The fact behind it, or the model behind it, is that this is a beginning farmer starting up and operating on rented or leased land. That's why the overhead is so low. If you look box to the right that says budget, this is the next year where the owner does a certain amount of income. In addition to that, is considering $20,000 in bank principal payments in the following year, and that represents a 20-year mortgage on a $400,000 property. So one business model is showing what you do as a beginning farmer. Last year, on the left column, a very low overhead operation, and next year I want to see if I can buy a farm. Increase my total profit required on line C on the right-hand box there to $50, up from $43,832, because some of that money towards buying a farm, a $100,000 farm with a 20-year mortgage. That's where those numbers come from. My overhead expenses are going to stay roughly the same. That's a rash assumption. And then use that gross and percentage that we established from historical performance, or in this case, you can show it to a beginning farmer and say, well, this is rough. This is a benchmark, so you can budget from this actually. The sale required would need to be $151,000 in order to make that next step from this model of renting land, low overhead, to buying land and operating with a mortgage. That's one of the decision points that I know is very a continuing question of your students is, when can I go full time? This is kind of that point being 2 years, one operating low overhead, rented land, and then the next year budgeting for how to do that in the future. So 5-line income statement, same thing as that box on the last slide. I just pulled it off to say this is important to recognize is what them credibility as a business person. They're able to describe this, whether it's a business plan or they're talking about their currently operating incubator business. They need to know these numbers off the top of their head. This should be their elevator speech about their business, which helps them understand the nature of their the business and the nature of how they make money. What is it that contributes to net or net margin? I'm just taking an income statement and put it onto a down there in the right side. I'm going to essentially, for the sake of the students, I'm just going to building from that 5-line income statement and build out and add more information to it. So I think of this as not being Chinese water torture, that adding just a little bit time and slowly driving them crazy, but rather that increasing the depth of understanding as you go along to be able to illustrate that this is not as complicated as it might first appear. That if you concentrate on these 5 lines, and that is your constant touch point as a student, every more information, another layer of information gets added. If they understand the 5 lines, then they've got a context to be able to understand more information to this, or what the importance of this new information I'm adding to this skeletal matrix of a 5-line income statement. We're cash flow budgeting. I did just see a question come up about how important is gross margin. So I'll address it here. The reason for, well, let me finish what I say about this slide. You can see that the top lines are the same 5-line income statement. The bottom lines are the checkbook. Cash, the difference, month cash flow, difference between beginning and ending, and then cash is the beginning cash of the next month. This is rocket science, but again, this concept of cash flow from month to month is in the context of that 5-line income statement. Why is important in my mind to emphasize gross margin is, let me go back a slide here. Oops, can I do that? Yes. Emphasize margin. On this slide, it's in that 40%, and it's in that box. Box is, okay, hang on, I'm going to go back a little more. Box is the magic number that allows you to budget into the future. Over can be extremely variable. If you've just built a barn, if you bought the farm, if you bought a new tractor, all of those things are very different in the context of how good are you at earning money doing this vegetable business. And top 3 lines of the 5-line income statement, sales minus cost of goods sold equals gross margin. That is your measure of efficiency as a producer of turning dollars of input or of cost of goods sold, or variable costs, whatever you want to call that, and turn it into a dollar's worth of sales. So in terms of percentage here, this is saying is under that cost of goods sold line, if you give me 60 cents, I'll turn it into a dollar's worth of sales. And my gross margin is 40%. If that about yourself, you know your efficiency of producing, and that allows you to budget forward. If you include overhead in that, it gets complicated, because then you have to sort of figure out to ignore, because if you're a really low overhead operation, or if you've just built something and make higher percent of overhead in your operations, that can distract you from your capability to actually be able to budget forward based on, so how good are you at earning money? Because overhead doesn't earn you money, but gross margin is your efficiency rate of how good you are at doing that, of earning money. Another picture. So 5-line income statement. I might say here that margin being outrageously high at 33% is due to two things. The overhead is very low, as well as scale of business, the owner's raw, or what the farmer gets of this, or they for their labor, is essentially in this net margin line. They're not going to get anything out of this. They're not included in the variable costs up above as a labor cost. The owner is going to be taking their return from this business out of the net margin, and that's certainly not any habit as far as how you account for this. I'm sure CPA could argue with that but it seems to make sense in the context of cash flow analysis. Okay, so we supply an income statement here, those 5 green lines, and we've added the lines that are the checkbook, but instead of showing them as an annual result, which still exists over there on the right-hand side of this chart, we're showing month by month, where students start to get nervous, because all of a sudden this is looking like a lot of numbers, and it's looking like a math problem rather than this wonderful business world that they wish to envelop themselves in and inhabit. This is kind of the nitty-gritty to get that concept that if you want to be able to manage a business, you can't do it year end with this. When you file your Schedule F, you need to be able to manage a productive business that has a lot of production risk and inherent changes in market situations or production situations across the course of a year. You need to that business more on a monthly level than on an annual level, and that's the reason for going to a monthly spreadsheet. This is not a balance sheet. It's not a P&L. It is a management tool that helps that young farmer understand how business is going to perform. As a lender, it isn't going to happen without a balance sheet. I mean, that just has to be there. It's that part of the equation that says, so are you going to put into this, Mr. Young or Young Farmer? However, bringing a monthly cash flow balance sheet to lender demonstrates a much higher order level of skill and understanding than simply a P&L and a balance sheet. My reason for encouraging beginning farmers to a monthly cash flow analysis is to be able to understand their business, and if well, let me get there. A sheet like this has more detail in it, is really the key to a business plan. That this essentially 90% of a business plan can lie in a spreadsheet like this, as long as that beginning farmer student of yours can explain all numbers that are in here. And you can see 5 green lines are there. So we're still working from our 5-line income statement and our checkbook at the bottom. This is again the benchmarked information from those CA farmers get farm stand sort of businesses. This is downloadable as a live spreadsheet. I'm not going to go through the actual functioning of this spreadsheet. You guys know how to do that. But it is loadable. And I put this out on a few lines so you can copy easier, or type your browser now, and then you can go and you can look at this. And you don't have to pay so much attention to me. Of course, no spaces between any of that. And as I understand from Eva, these slides will all be available to you. And if you were to go to this website, the slides are there, the sheets there. There's actually another spreadsheet and slide that are from the position of a grass beef operation. So Farm Credit intent is to keep building more of these business plans that align with a cash flow analysis, so that there are plenty of examples that contained either benchmarked or robust, if you want to put it that way, from loan officer experience as to how a particular small business ought to look. And the whole point of this is to create expectations so that farmers look to something that at first glance is complicated, a monthly cash flow spreadsheet. In the end, they look to something like that as really the intense and deep understanding and explanation of their business. Because in the end, the most effective thing that I think that anybody who trains beginning farmers can do is to send beginning farmers out into the world with expectations that are likely to be disabused of by reality. Beginners need somebody to tell them the truth, help them set reasonable expectations, and not just to copy somebody's expectations, but to understand the nature and scope and substance of what they expect their business to do. And I think those who train beginning farmers that are frequently solemn duty to crush somebody's dreams, if that's what it ends up being, because it's a lot less to be able to be a cheerleader for somebody when likely not to be able to understand, at the very least, understand the goals that they're heading for, or not have goals. They just kind of expect, well, everything's going to work out if I work hard enough. So this model and the grass-fed beef model that's also on that website from the Farm Biz Trainer website illustrates a very low overhead business on rented land with the goal of making cash fast. About the business, particularly the CSA business, yes, there's cash up front. That's a really good thing for a startup business. Great business model. If you think grass-fed beef, you may be looking at, if you decide to be a cow-calf operation, you're looking at 4 years if you buy young females and then raise them up and breed them and wait for them to dry calf and then wait another 14, 18 months to fatten a calf. That can be a considerable length of time that you have negative flow. The reason for using a startup or a beginning farmer business model in these spreadsheets to help beginning farmers think through how they're going to earn money, because they need to be earning money quickly. It's saying to both you, as I hope you would say to your beginning farmer clients that keep for tax purposes is entirely different than keeping records for management purposes. That there is a wonderful thing, but if they think that L from QuickBooks going to be as worthy and as comparative a tool as a spreadsheet which has budget expectations, then those farmers are looking at the wrong tool. And I know that QuickBooks has budgeting capability within it. I don't care where the spreadsheet comes from. I don't care if they built it themselves. I'm showing you, hopefully, what is a way to teach farmers monthly cash flow budget is very important, and it's up to you to figure out which one you like. Julia had a good one that she showed us earlier in this webinar. You all have your favorite way of doing things. I certainly encourage you to use what you've got and what you're familiar with. Please use something that is in the nature of monthly cash flow, so that you're communicating the idea that as a production year goes along, that a bee farmer has some degree of a plan for how much accomplishment they make each month, and that hopefully will allow them the ability to change goals, to fill in, to make up for some disaster when they don't meet their plan. Hopefully we're all over this as far as elements of what encouraging your beginning farmers to do. That protect crediting, I know, is likely a difficult thing while they're maybe on an incubator farm and having less than a full-time income. But if you think about the future you are trying to provide for them in farming, if they are capped by poor credit, yet have tremendous writing skills and business plan writing skills and experience because they've been in your incubator farm, they're going to be able to farm when they finish because their rating is so bad. So I urge you to look at an integrated worldview, if you will, that along learning stuff and learning things and learning processes and learning the hands in the dirt sort of stuff, that all or not if the student finishes an incubator farm tenure with a total of 4 years of bad credit history and a lot of skill, because what you have destined them to be is somebody else's employee if they can find work on a farm. Because you can't go out and buy a farm with a poor credit history. It's for last because I think it's potentially the most important thing to communicate to beginning farmers, that they only get 2 out of 3 of these skills. And the good is relative to their relative dislike of the financial side of all of what I was just talking about. This is that's the easiest skill to either purchase or rent from somebody else. That someone be a bookkeeper, having you as incubator farms be able to consider that you will continue to advise in terms of a probability team or performance team, whatever you might want to call that, after the graduation. That sort of ongoing mentoring would be in the form of review of financials, because it's the easy language to talk in, it's the shorthand, it's the quick way to have a relation about how one of you farmers who has made the move off of the incubator and onto their own business can really benefit from your skills and ongoing attention to them, because that performance is into them being able to continue, and even it's easily hired as a skill set, think bookkeeper or CPA, it still is where the actual mentorship and suggestion and to consider offering considerations for their financial performance and fixing it or improving it is, I think, the ongoing role that you as incubator farm operators would best be able to provide. And of course, hopefully this is something that you do on the forearms of every one of your participants, that they remember to keep in contact with their and report that this is probably the most determinative thing of their future ability to borrow money. They are lucky enough that they're independently wealthy. In that case, you might want to have them, I guess they don't have to worry about their own credit history, but the average person going through an incubator farm is someone who I'm thinking is looking to make a living at farming, or at least being a very serious level of production and business capacity. And this credit report will follow them their earnings years like no one else will, as far as being able to access credit. So I'm done. I only saw that one question pop up, so I will stop sharing my desktop, and you have it back, and that way we move on to some questions.
Thank you, Gary. That was really great. I want to remind everybody and let you know also that we'll have some of these spreadsheets that Gary showed and mentioned available for download online when we post the webinar recording and the slides. And you're going to get a link to that with the evaluation after the webinar. You can also go visit our website, nisfp.org/Nifty, and find all of that there. Questions ready, and we do actually have a good number of questions. But I want to give you a very quick heads up about some of the next events that are on the horizon for Nifty and how you can take advantage of our resources. So like I said, we do have quite a bit of free one-on-one technical assistance and mentoring available to offer incubator projects through our project partners. And these partners are some of the longest-running incubators in the United States. So if you are interested in that, please do get in touch with us, and we can set you up. With that, webinar series will continue in December with a focus on record keeping for incubators and incubator farmers. So now know a key component of the topics we discussed today. So we're going to dig into that a little bit more. And in long term, we're going to be talking about advanced topics in land access and other things that are really related to transitioning farmers off of the incubator. That's a major goal that we all have to some degree or another, maybe not all of us as much so, but these are the things that we've noticed are really essential as financial literacy and land access. I guess sources include a searchable database of documents related to incubator project management, a listserv, our toolkit case studies. Finally, again, please fill out the evaluation that I'll send you, and you can always email or call if you have specific questions or feedback Nifty. And there are things that we can provide professional development opportunities around. So now we're going to take some of your questions. I have to get oriented here real quick. Got that. Okay, so I figure out how to look at a Word document and at this PowerPoint at the same time. So I'm seeing that. Okay, great. So first question. why break out the, quote, other income and expenses, and how to determine what is other? It makes the cash flow statement more complicated. You just need to have those there, but we don't understand why they're separated or how.
Excellent question. My goal of separating out the other expenses is to make sure that the farmer can see how profitable they are in the base of their operations. So if they get a grant, for example, that's basic operating revenue, and that would give a farmer a false sense of how they're doing. If paying for capital expenditures, if you're buying a new tractor, it's going to be an anomaly expense. So it can throw off what looks like a really bad year because you had $3,000 worth of expenses to buy the new tractor. So it's important to keep a clean view of how the business is doing on its own, and then the ancillary expenses, whether it's other income that comes from renting out your barn, or getting a grant, or the capital expenditures that are one-time expenses that last over several years. That segues into the concept of depreciation, which is a way to recognize the value of the capital expenditures that you have. So it seems long and complicated and overwhelming, and in ways it's intentional because I want to make sure that farmers are really understanding all the potential expenses, because it's all little things that people get that start to add up and can get people into a cash flow situation. Hopefully that answers that question.
Great, thank you. Next, and also for Julia, we've seen lots of different ways of breaking down direct and indirect costs, and I remember seeing indirect costs in your presentation. Could you talk a little bit more about your thoughts on that?
Costs were actually the general and administrative expenses and the sales and marketing expenses. I have them categorized a little bit differently, but I don't necessarily call them indirect costs. So we have I have direct operating expenses, and payroll could be considered a direct operating expense. I break it out a little bit differently, and I do that just because people like to measure components of their business and have different benchmarks. So while you might want to have overall your direct operating expenses at, let's say, 60%, you may want to look more specifically at the cost of repairs and maintenance, or labor, or the more operating expenses. This is my personal style, and other people may choose to break things out differently. For example, Gary his variable and overhead expenses, and it's fine to do it either way, but what works for you and what makes sense for you as you're managing your business.
Great. For both of our presenters, what are the best introductory accounting books specifically for small farmers, utilizing current accounting tools such as QuickBooks, web invoicing, etc.?
A couple of favorites. One of them is Fearless Farm Finances, and the other would be The Organic Farmer's Business Handbook by Richard Wiswall. Some people like to have a book like that, and I think that both of those books are written as to be able to give an understanding of both the kind of cash flow budgeting I'm talking about and the tax account sort of world, complex layers as part of the kind of financial information that a beginning farmer needs to at least be familiar with. But again, I'll put in a pitch for cash flow accounting as the more important of this, at least to start the education with, so that there isn't too much accounting that gets folded into the idea of you need to track your business. And I think that's a operation that I see, that going to a P&L and balance sheet and explaining something like depreciation is at the beginning of someone's learning career is perhaps a diversion from what they need to know, which is, so what do I have to keep track of in order to know if I'm making money or not?
Any suggestions?
The book I know about is Richard Wiswall's book, which Gary just already recommended. So unfortunately, I don't have other recommendations.
Great, thank you so much. So next question, which Gary touched on, I think, a little bit, around the spreadsheets and how they integrate into QuickBooks and simple bookkeeping software.
Yeah, the spreadsheet that I showed does not integrate with QuickBooks. Let me be clear about that. It's the thing that that kind of spreadsheet is something that is, of course, created by somebody who already understands the business. The challenge for a beginning farmer is to find their way, the easy way for them to look at their business and understand what they need to do. In the end, that's what we're trying to teach. So I think about that slide that I showed that showed the 5-line income statement and the checkbook, but for each month of the year, but only those 5 lines, and that's enough for people to visualize what they are doing in their business for at least the first few months incubator farm or their first half a season, and get more familiar with. If they identify the need to write down more, well, I need to know what the cost of my seeds were, or the cost of that piece of equipment, which I think I'm going to call overhead. As the curiosity, as the need to record more information is generated, they have a framework in which to put it, and that's how I like to think of the spreadsheet as far as a record-keeping tool. And what I'm suggesting that is not a QuickBooks. QuickBooks is great, but you have to teach a lot of accounting, I think, in order to, unless you've got a really good way of teaching QuickBooks, you end up getting bogged down in a lot of accounting that is less about management and more about tax reporting.
Okay, Gary. And could you just quickly repeat the names of the books that you had mentioned before? A couple people missed those. And sure. We had one more additional resource, which is Building a Sustainable Business from University of Minnesota, which is a great resource, and you can find it just by Googling.
Both and I recommend is the Organic Farmer's Business Handbook, and that's Richard Wiswall, W-I-S-W-A-L-L. And the second book is Fearless Farm Finances. And there are 3 authors, one of whom is actually a farm credit guy that works out in Wisconsin, Paul Deitman, D-E-I-T-M-A-N.
I'd actually like to address that QuickBooks spreadsheet question. Because I'm a huge fan of QuickBooks, and I think it can be set up in a way to really help with the budgeting. And going back to the question about how my spreadsheet is so long and expansive, I'm trying to tie it into the QuickBooks so that as you get some historical data and as you enter things in, you can then start to transfer numbers to your projections for the following year. So as you start to get an understanding of how much you're spending on seeds, then you can say, well, how much do I want to grow next year? And you have a number to start from. So if you've got set up in QuickBooks that you can easily translate into your cash flow projections, it'll make things a little bit easier.
I agree with Julia. My comments spring from I can teach that. I would have a harder time because I'm not so good with QuickBooks. And I urge you as a teacher to find what it is that's comfortable for you to work that. If you can work in the sphere of QuickBooks, then maybe you're helping people skip ahead a couple of steps. But it all depends on the capability of your students to grasp QuickBooks and the relationship between the whole set chart of accounts to the functions and management sort of reports that QuickBooks will give you.
Thank you for your insight on that topic. Okay, next question. How relevant do you find gross margin to actually be for farm businesses applying for financing? I wonder because most farmers include or think about cost of goods sold in very different ways.
Thinking the same thing that Gary and I were thinking of cost of goods sold or gross margin very differently. And I don't know that the specific number of gross margin is important as it is to outline the different costs that you have to make sure that you've clearly thought through what your is going to be, what your expenses are, what are direct operating expenses, and what do you have left over after that to pay for the ancillary expenses, whether it's fees or advertising, marketing, or whatever. So where you draw a line at gross margin is not as important as understanding that you're making a profit and what you have left over to spend on the additional items.
Great. Question. How do you determine healthy or sustainable gross and net margins as you evaluate historical data and decide what you are capable of taking on in years to come? Can you please provide more insight about general ranges? And this one was for Gary.
Well, I'd point you to the National Good Food Network webinars, and I've done through their ngfn.org have study are that are one source of information to help people understand what their vision ought to be, they can expect for performance. In the end, that's the hardest thing to say. It's the hardest. It's the most important number to help set an expectation about that there's between their gross income and their net. So, whether it's from cooperative extension or a good source like Virginia Fairs as a business planning website that's similar to Ag Plan from University of Minnesota. The enterprise budgets that are out there, some are as easily accessible as just Googling enterprise budget for a particular crop or type of business. But being able to have a net profit quickly is essential. The idea of saying, well, in 4 years I hope to be able to break even is not a real good plan. The obvious deficiency there is how are you going to fund that lack of sustainability over the 4 years, and what happens if there's any interruption in your plan that is going to put you in a further hole that make it harder to go out of. So the idea of deferred profit is pernicious. I think it's because it is required at the outset that you have cash in reserve to be able to continue to pay your food and put in the kids' feet and do the other things that are necessary to live, and starting someone out with a projection of a loss for even a couple of years is very dangerous thing to do that does not necessarily serve that student interest. Of course, that can be mitigated by having an off-farm job, so their source of income can mitigate that problem. But purposeful, intentional are a bad idea in a plan.
I think that ties into the next question that's come up a couple of times. People are hearing more about where the owner's labor gets accounted for, how you track it in a small farm, and if there are additional practical ways for farmers to account for their income or earnings needed for living expenses rather than just taking a draw out of the net profit. Is it ever useful to use an hourly rate or salary for budgeting or actual accounting as far as that goes? It could be for either. Julia, do you want to start?
Sure. It's funny because I'm just working through this with a beginning farmer right now, and in their first year they showed a profit of I think $5,000. The only thing is that they didn't account for their labor. So we've been working through trying to understand what their expenses or what time is with business. The thing to recognize is that as you grow your farm, you're going to have to start paying somebody for it. You can't do everything yourself. So it's important to budget in how much time you spend and assign something to it, even if it's, $8 an hour or $12 an hour, just to put some value on your time, because if you're not doing it, somebody else will be doing it. Not be able to afford to take an owner's draw in the earlier years just because, the nature of the business. But it's important to, have a number in your mind as to what your view is to the farm if somebody else needs to take it over. You can put your owner's draw within the direct operating expenses, or you can put it as another expense below the operating profit number. And that, how it's about how you think about your business and your numbers and what's going to be most meaningful to you.
Julia, that if you ask 5 people how they should account for that and where they should put the owner's labor expense, you'll likely come up with variations on 5 different answers. Because the really important thing is to help somebody recognize the value of their labor and set an expectation for what they hope to get out of business. Beyond, it doesn't matter that much to me where that is accounted for. You make the case that it is owners. The pay the owner is an overhead expense because whether that owner is producing 1 tomato or 10,000, they're butt heavy in the tractor seat, and they're going to, as a admin expense, and they're going to be there whether they actually have an operating profit or not. I know that's a little. I'm just saying that to illustrate. There's lots of different ways to account for that owner's labor.
Now we've got a last question, and I saved it for last because it's related to the next webinar that we're going to do. But there are a lot of tools available for analyzing data for farmers. We need more tools to help them collect the data. This is specifically for Julia, but I think both of you might have some insight into this. What do you have available, or what suggestions do you have? And again, we have a record-keeping webinar that's going to be coming up in December, so you'll get more information about that. I think subscribe to the NIFTI listserv, which you can do by either emailing me or going to our website finding out more. But record-keeping tools, just as a word us off on this topic, because I think it's a big one.
Go back to QuickBooks because I think it's a great way to start tracking where your money is going. I like to think of it as a jacked up checkbook, that every time you write a check, you assign an account to it and you say, I spent the money here, and then you can go back to the reports and see where the money is going over time. For a farmer, sometimes QuickBooks is just a way to add the data and not necessarily balance the checkbook, but as they become more experienced with the numbers, then they can start using QuickBooks for actually managing the checkbook and their cash flow. So there can be a gradual step in using books. Alternatively, just a basic spreadsheet, and just going back to the different account names. So, if you want to have an account for seeds and soil amendments and capital purchase, black plastic, or whatever it is, have one for the name of your vendor, a column for the amount that you spent, and a column for the category of the expense. And then in Excel, you can just sort, so then you can actually see where you're spending the money for each one. So QuickBooks is great, but certainly Excel or but to make sure you start tracking everything by the different expense category.
Like with the best things that you as instructors can give to the students is the chart of accounts for them to start with, and that's one way, as Julia talks about, sort of working into QuickBooks, doing incrementally. That's a way to accomplish that, to help them with the chart of accounts that they can then further define and add to as they see the need to do it. You get a student to the point where they're making suggestions of, can I do it this way? Can I create a new account under this subheading? You're really at a point where you know that your lessons are sinking in because you're getting some creative thought, and that's in the end, that's the goal to record keeping, because you want to have that capability to direct creative thought at financial record keeping, so as to be able to get some creative results out of it in terms of, here are these I have, here's a budget that I could for in the next year, to be able to business from the tools with, and having the accounting tools be an end of themselves only for tax reporting. And final thought, Eva, I said it at the beginning presentation and didn't at the end. If in the course of, in the scope of your incubator firms, if you find the need to have or discuss further the idea of having someone from Farm Credit come and lecture on this or other topics that may be appropriate, please contact with me, and we'll try to those sort of interactions, find out if it's possible in your area where you're located.
And for people who may not know, Farm Credit is national, is that correct?
That's
yep.
The wrinkle in that offer is that it's 76 independently operated Farm Credit institutions around the country, so that's why I'm suggesting, if you think this might work for you, please shoot me an email, and I'll help with an introduction.
Thank you so much, Julia. Thank you, Gary. This has been really, really helpful, and thank you to everyone who attended. Again, there's going to be a recording of the webinar, all of these resources posted online on our website at nisfp.org/Nifty. Yep, please fill out your evaluations. Thanks for coming to the webinar.